I see it differently. I see it as the carrot plus the stick, right? The SEC is holding this big stick over Coinbase's head in the form of this lawsuit. But number one, they might not win. In fact, there's a good chance that they won't. And number two, it'll take years to play out anyway.
But the fact that they were saying Bitcoin is used for illicit activities 3 or 4 years ago, and that it's terrible for the environment and all these other things that Larry Fink would be out there talking about, to him using the word hope and Bitcoin in the same sentence as he's on CNBC and talking about how probable it is that they're going to get it approved because they have this track record of 500 to 1 or whatever the number is of previous ETF approvals. It's a big deal.
What's up, Sats fans, and welcome to another episode of Swan Signal. I am your host, Sam Callahan, lead analyst at Swan Bitcoin. If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today. And we got a quarterly update. One of the most popular episodes of the year. We got Mr. Preston Pysh and Mr. Andy Edstrom with us once again. Welcome, gentlemen. It's a pleasure to have you back.
Always great to be here with you, Sam. Great to see you, Preston.
Great to see you guys. Awesome to be back, and I really look forward to these.
Yeah, so last time we talked was basically the very beginning of Q2. And a lot has happened in quarter two since then. But, you know, the price is pretty much grinded sideways. It was about 29K when we last talked. It's about a little over 30K now. But a lot of things happened in the process. If you guys remember, we just had First Republic failing and Credit Suisse collapsing right when we talked last time. I don't know if you guys forgot about Credit Suisse, but that happened. We also had the debt ceiling, that whole drama. We had SEC lawsuits against Coinbase and Binance, obviously. And now we have all this ETF news, and all of that happened in quarter two. And so let's just get a very broad overview from both of you guys. What are some of your takeaways from the last 3 months when it comes to markets and Bitcoin? Let's throw it to Andy.
All right. Well, I guess if I'm going to go back to, take a little longer view, risk markets, in quotation marks, bottomed last year, and we've had a pretty furious rally, and still, Wile E. Coyote is still running in the air and hasn't noticed that he may or may not have gone off a cliff. So in one respect, the bull market has been surprising to me. I can make a case for it with respect to the recession at least being delayed. Like the economy's, the economic numbers have come out stronger than most people expected, certainly than I expected. I still expect a recession, but but until then, markets have held up surprisingly well. I think when I look at Bitcoin, I can paint it with the brush of, it's correlated to the Nasdaq or it's correlated to stocks. Although, frankly, the recent correlation data seem to have broken down a bit. Kind of depends on how long, a time interval you take a look at. And then obviously with Bitcoin, we had specific news, which was the BlackRock ETF filing. I'm sure we'll talk some more about that. But to me, Bitcoin is playing out the 4-year boom bust cycle around the halving. I think the bear market is still over. I suspect, I think Preston probably called the bear the soonest correctly, and I think I probably came in later, and I can't remember if we talked about that last quarter, but the bear, I think, is still over. And the big news is the ETF stuff.
Yeah, I don't have too much to add. I would just say the price action over the past quarter has gone sideways, like you said, Sam. But I'll tell you what hasn't gone sideways is the amount of coins on exchanges just keep getting sucked out of the exchanges. And why that's so important is you get to a point where there's just supply suffocation, and to Andy's point, I think the bottom's in for the bear market, the 2022 bear market. That bottom's in, and as those coins continue to just exit these exchanges and get stacked into like really strong hands, it's just really hard for the price to be punished much further because it's just the coins are finding their way into people that just have absolute uh, conviction beyond reproach that are holding these coins. And so you saw BlackRock's announcement, right? Let's hit that a little bit. So 10 trillion assets under management. So like if you collect all the taxes in the United States for 2 years straight of every single company and every single person, like that's how much money that is, just to kind of give people an idea, like how much buying power, $10 trillion of assets under management. And when you look at the brand that they have for ETFs, all iShare products, if you own iShares anything in any of your trading accounts, that's BlackRock. So the fact that that entity is coming out and not doing a cash settled Bitcoin vehicle, but they're doing a Bitcoin settled vehicle is a really, really, really big deal. And I know that's not popular for people in Bitcoin to say because it's just like, F BlackRock, we don't need them. And we don't. But the fact that they were saying it's Bitcoin is used for illicit activities 3 or 4 years ago, and that it's terrible for the environment and all these other things that Larry Fink would be out there talking about, to him using the word hope in Bitcoin in the same sentence as he's on CNBC and talking about how probable it is that they're going to get it approved because they have this track record of 500 to 1 or whatever the number is of previous ETF approvals. It's a big deal. And where it's a really big deal is you have companies that would probably not touch Bitcoin because they can't understand the custody. It's just too difficult, but they love the asymmetry of it, that can now buy it and put it on their balance sheet as a marketable security in their marketable security column and get that asymmetry to the rest of their portfolio, whether they're sitting on a bunch of treasuries or equities or whatever it might be. That's a really big deal. These companies have tremendous, massive amounts of buying power on their balance sheets that they can now allocate into something in a turnkey kind of way. And I just don't think that the importance can be understated, and I think it's a way bigger deal than people realize.
Yeah, Andy, in the last show, I'll read it. You said a number of banks that are banking in crypto is over 100 right now, according to Caitlin Long. I don't know who those are, but scrappy players are going to come in and pick up these pieces that want the business. Someone will be willing to do it because there will be money to be made. Did you ever think it was going to be BlackRock, though?
I was not predicting that BlackRock would surface. What's interesting, and I think this is why there's such a divergence of opinion, let's say between, there's one camp which is, oh, this is the 35th application or whatever that's been rejected, some big number. And then there's the other camp that says, wait, look at the facts and circumstances. And I'm in that other camp. And the reason I'm in that other camp, part of it is the political dynamic that Gary Gensler may have overstepped his bounds and is perhaps a little outside the lines of his administration and his party's goals. But the other thing too is the timing with the lawsuit. The Coinbase lawsuit is just too perfect. I think the first level analysis says, oh my God, the SEC is suing Coinbase. How could they possibly approve a product that involves Coinbase, which would be custodian and feeding market data, right, to this surveillance arrangement, which has been one of the SEC's major blockers to an ETF so far. I see it differently. I see it as the carrot plus the stick, right?
Yes.
The SEC is holding this big stick over Coinbase's head in the form of this lawsuit, But number one, they might not win. In fact, there's a good chance that they won't. And number two, it'll take years to play out anyway. And number three, almost every case that the SEC has brought in the crypto industry broadly, including Bitcoin, has been settled. In fact, I almost want to say it's been every case, but that'd be a good question for the lawyers. So they've got this stick, they got the cannon pointed at Coinbase, but they also can offer at this olive branch of this custodian and monitoring business for the ETF. And it's just too elegant of a situation. It's too elegant of a solution for it to be coincidental in my mind.
Totally. I mean, it was that news broke 3 days after Binance was sued. It was
Yeah.
within a week. It was within
Yep.
a week, whatever it was. And if I'm a big Wall Street firm and I want to play in this space, like you got to look at how much business they're offloading on the custody side to Coinbase through this action, right? So if I'm Wall Street and I want to put out this product, because I mean they're just going to make gobs of fees on this thing, even at a low rate, which I think it's going to come in at a very reasonable rate. It's not going to be the Barry Silbert 2% or whatever GBTC is. It's going to be significantly lower than that. And when it does come into the market, they have to outsource all that custodial work. So, I mean, what better situation for Coinbase to get slapped with this giant lawsuit? The price is going to take a hit on Coinbase. They can then swoop in and start buying the equity of Coinbase if they actually see it as like a long-term technical, like from the IP standpoint, the asset of Coinbase is really just kind of like all that technical setup that they've been doing for the last what are we, almost at a decade for Coinbase? Like that's not something that they can start up and put in place in a couple weeks. Like that's a
Oh, no.
major thing that they have established over the past decade. So like, hey, let's slap them with this lawsuit. Let's go buy up some of the equity. I would love to see who the shareholders are after the close, after this next quarterly closeout, to see how much change in share ownership has happened. I bet you Wall Street's buying the hell out of it. And so it's like this double whammy, and it's like all fitting together for them. But yeah, no, it's pretty fascinating. It's very big news. It's a very big deal.
I agree completely with you, Preston. And let me take it a step further in terms of the strategic view of BlackRock. So BlackRock, despite their success becoming by far the world's largest asset manager, what was the biggest mistake BlackRock made in their history? They let go of Blackstone. There's a reason that BlackRock and Blackstone, by the way, the latter being the world's largest private equity firm, hugely profitable business, right? Total behemoth. There's a reason they have practically the same name. They were actually the same company. And they split, the management team split and the businesses split. And that was a huge strategic mistake for BlackRock. Since then, they have gone in the direction of offering literally every product under the sun, right? They have active managed funds. They got big into the passive funds, the ETF business, because they knew they wanted to own that vertical. Okay, my former firm, the hedge fund I worked at for 6 years back in the day, was subsequently acquired by BlackRock. And they paid, let's just say, a very generous price for the equity of Tenenbaum Capital, the firm I used to work at, which is undisclosed, by the way, so don't quote me on it. And of course, I have no inside information. So it was an eye opener for me because it was not core to their business at all at the time they made the acquisition, but it was another data point in the history of the firm of BlackRock in their quest to offer essentially every investment product under the sun. They've just continued to diversify and accumulate and acquire. And what's the one asset class, quote unquote, where they have had no exposure up until now? It's Bitcoin, and it was sort of inevitable, I think, that it was going to happen. There's no way we could have known when, but it's just part of their long-term strategy of being the supermarket, that offers every financial product, every investment product to the market.
Yeah, I've been surprised. It's hard to tell with BlackRock and these other institutions that seem to be shifting their sentiment towards Bitcoin. How much of it is they actually believe in the future of Bitcoin and the potential here for this new monetary technology? And then how much of they just responding to customer demand that they want these things? And I think, Preston, you make a good point. These big, large legacy institutions, these dinosaurs, they don't have the technology in place. I mean, this is why Morgan Stanley acquired E-Trade. This is why Charles Schwab acquired TD Ameritrade. It was really a technology play because they didn't have the resources or the time to build that stuff out internally. And perhaps this is just a play to give Coinbase that carrot, so to speak. And if they will acquire a lot of the equity of Coinbase, just try to get some good price action to buy that cheap. I think that's a really sound point. It's really interesting. But how much do you guys think that this really is like Larry Fink going on TV saying that Bitcoin is this international asset now? Or are they just responding to customer demand that say, hey, we want this thing and they're just going to build it now? Like, what do you guys think about that?
I don't know. What do you think, Andy?
Yeah, I do think it's customer demand driven plus some forethought. So, if you get back to I guess my framework I just laid out about they want to be the financial supermarket and they want to, if there's demand for a product, they're going to sell it, right? And they are somewhat forward looking. They were somewhat forward looking with their ETF business. There was a time, I don't remember when that deal got done. I think it's probably 10 or 15 years ago now, when the ETF market was showing traction and showing scale, but perhaps it wasn't as obvious that ETFs were going to take over the world. Some people figured it out. Probably Preston did. But I hadn't figured it out quite by then. And so I think, Fink's no dummy and his board are smart. And so I'm sure that, I'm guessing that the math and the strategic calculation they're doing with any new business or any new segment that they enter is how much traction is there, plus how much growth potential do we think there is, plus how long is it going to take to play out, sort of those three factors. And if the scores line up favorably, my guess is they entered the business. I mean, I don't have any insight into. Yeah, I haven't read the board's meeting notes, but if I had a guess, I'm guessing they saw a business just like you laid it out. They figured either there's customer demand now or there will be, so we should be in it.
Yeah, I
What do you
agree.
think, Sam?
I think this,
You've been covering this industry in detail for quite a while now. You're a lead analyst at Swan. This is your backyard, my friend.
yeah, no, I mean, I was pretty surprised with Larry Fink's comments, on Fox Business of all places. And I thought it was pretty deliberate that he went on that show of all shows. And I thought it was like, Andy, you wrote that piece like Bitcoin's the most ESG asset, right? You think about BlackRock's history with ESG. They were like pushing that stuff. And now you've seen over the last few years, it's just really backfired. I mean, they've gotten pushback from the oil and gas industry. Multiple states said they'd stop doing business with them. And now you can just see them backpedaling. And now they're going into Bitcoin. And Andy, you wrote that piece of why Bitcoin's actually really, quote unquote, ESG. It's the perfect ESG asset. So, I mean, I think that maybe
And it
they
is,
did their
and it
homework.
is, it
It
is.
is.
It's not. We're just saying that with a smirk on our face. It is like,
Mhm. I
It,
know.
so
and yeah, I agree. And here's the backstory on that, right? So it was 18 months ago that I published that piece in Bitcoin Magazine, and and the there was two impetuses for it. One was, and we all saw this, right? Everyone in Bitcoin saw this. The ESG narrative was just getting louder and louder. And number two, I saw it with my clients, and I was starting to get questions, criticisms, you know, hey Andy, this this seems non-compliant, non-ESG compliant. And so that was the reason I penned the piece, and I had some confidence that I was right at the time. I hope I hope we're right about this. I think we're right, and it has been funny to see the turnabout and see Larry Fink of all people, adopt Bitcoin. But hey, maybe he figured it out. I'm sure he's got a team of analysts to analyze the ESG characteristics of Bitcoin. And even though I think he said he wouldn't utter the words or the letters ESG in that interview anymore because of the political backlash, my guess is they figured it out.
The one thing I'm really interested to see. So now that you have the Larry Finks of the world coming out and being pro Bitcoin and saying that it's hope for the world, right? And it's international, nobody controls money. I wonder if you start to see some of the politicians that are heavily influenced by the big bankers start to change their tune on Bitcoin. And I think we know the politicians I'm referring to, and I'm not going to say their names out. It's almost like the Harry Potter Voldemort thing. You can't even utter the words, right? Um, but there's a couple of them, and they're hardcore staunch. And I think a lot of them will say that they're anti crypto and not necessarily maybe anti Bitcoin. But I think it's going to be really telling, looking at the closeout of 2023, if any of those voices start to change their tune towards Bitcoin, because I think you might see it. I think you might see it because I think a lot of these banks are
Yeah.
saying, "Don't be, hey, shut your mouth.
No,
You want to
yeah,
keep
they're
getting
gonna.
money from us. You want us to keep supporting your campaigns and getting reelected and doing our deeds for us on the Hill. Then shut your mouth."
Yeah, they're like BlackRock's on the phone. It's like, oh, we like
Yeah.
this thing now. Okay, okay.
I think that's going to be a very telling moment if we see a shift on any of these people on that particular topic, because I think it could
Well,
happen.
those politicians too, they wrote a lot of letters, and we know that the letters were full of
Oh
misinformation,
yeah.
shoddy research. I mean, there was multiple Bitcoiners that dug through them and really pointed point by point, pointed out what got wrong. And so the truth was always on our side. So maybe they also will come to the light and realize how wrong they've been
But
about
all
it.
of that was penned back whenever they maybe were hopeful that when the price was at 16,000 or 17,000 that they were going to be able to pin it to the mat and get it to tap out and disappear and the whole thing fall
Hmm.
apart, only to find out that it's up like what 80% on the year to date. And it's like,
Yeah.
holy hell, this, like, you can't kill this thing. And
Nope.
I think that realization is like, all right, okay, so like we got to deal with this. We got to have a product around this because this thing's going to come back with a vengeance. Like it's not just coming back angry, like it's coming back with like everybody on the block, and it's going to like slaughter all of us.
Hmm. Well,
Yep. And not is there
yeah.
huge potential upside in terms of business, but BlackRock being the market, I'm talking about BlackRock is the market in terms of investment, right? They cannot afford to be tarred, by a significant portion of the population as bad. So I'll give you an example. I've had clients who have come to me, more than one client, who have said, "Do we own BlackRock products?" I don't want to own BlackRock products. This
Wow.
ESG narrative is nonsense. It's wrong. It's bad for America. Basically, basically, I am prohibiting you, or I'm considering prohibiting you, financial advisor Andy, from owning this stuff on my behalf. So, if you are the consumer, the biggest investment brand in the market, you cannot afford to have a significant portion of the population, basically backing away from your product for, I don't know if I want to say political reasons, but let's say headline reasons. So I think that may be a factor. Bad for business. It's when you get to a certain size, you must be friends with everyone, right? You must be as
Hmm.
plain vanilla as possible and as minimally offensive as possible, because all you'll do by taking an opinion is eliminate some portion of your potential customer base.
Which is why it's pretty crazy that they're putting their neck out, their reputation on the line when they're filing for the spot Bitcoin ETF. Like, obviously, they think that there's a chance that it will get approved and that this thing's not going away and that there's a lot of demand for it. But let's talk about some of the drawbacks, because obviously a spot Bitcoin ETF would be a buoy to the price. There'd actually be demand for the underlying Bitcoin, and it'd be extremely popular product. Let's be real. But even Preston on the last quarterly update, you talked about the risks of an entity getting really big. Individuals are lazy, not taking self custody, and how that could set us up for a painful experience and potential manipulation. So, I believe with the spot Bitcoin ETF, only authorized participants would be able to actually redeem the underlying Bitcoin, and they have to be approved by BlackRock or what other sponsor. It could be a Fidelity, it could be ARC that gets approved. But what are some of the risks that you see with a spot Bitcoin ETF?
Yeah, the risk is the consolidation of, let's just say, it seems like all these filings are saying that Coinbase is going to be the custodian.
Yeah,
Like, that's an issue. That's an issue for the people that would trust these entities to buy and custody their coins. Like, it's not an issue for me. I can tell you that. It's
yeah,
not an issue for me. It's an issue for the people that want a turnkey solution and to not have to go through the work of self custody. There's going to be tons of them, tons and tons. It's going to be the preferred way to buy it. And for Bitcoiners, like, that might be a hard pill to swallow. I'm sorry. You're just going to have to deal with reality. Like, you can't force everybody to be hardcore like you and me. I know I can't. Um, and uh, do I wish everybody would take self custody? Of course. Do I think everybody would avoid a lot of pain if they would go to that trouble to learn this and do it right? Of course. Is that what everyone's going to do? No, they're going to probably buy the BlackRock product. Um, so yeah, it's an issue for that person who's gonna rely on that. Um, so how do you avoid it, or how do you try to reduce that risk to the overall market? I think that there needs to be, you know, geez, how do you force people to maybe custody coins for these entities with more than one organization to reduce the risk? uh, Maybe insurance products somehow.
yeah,
I don't know. Like, there really needs to be. I don't have a good solution because we're dealing in the land of ultimate responsibility, and in the land of ultimate responsibility, like, you're only as good as those people that you're trusting, and if you're trusting somebody, like, there's going to be some that are untrustworthy, which we have clearly had on display in full effect. And do I think BlackRock is more trustworthy or is going to be a better custodian of coins than FTX? This is easy for me to say because FTX was an abomination, but it's really hard to say. It's really hard to say because this transition to this new system of ultimate responsibility is so different than the fractional reserve uh, system that everybody on Wall Street is growing up on. And I just don't know that that mindset and that mentality is going to be prepared for how over the top this ultimate responsibility really is that we're moving towards. I mean, Bitcoiners are like, when the price goes to 16, like, the hardcore people are like, send it lower. I want to see it go lower. And the reason why is because they know you can't jerry rig it, right? And they know that it's going to find a bottom because they know that the more can't be printed and bail out people that have done dumb things. That's why hardcore people cheer it on, right? I don't know Wall Street's prepared for that level of responsibility. We'll see. I didn't give you a good
Amen.
answer, and I didn't give you a good answer. I'm sorry.
Amen. Well, I have a few thoughts. First of all, Wences Casares, um, who has, who's just legend, not least because of his
Yeah.
hair, but for other reasons. Um, he figured out early that there would be a need for a very, very secure cold storage custodial system. And so he founded Zappo, and he created this multiple vaults on multiple continents, right? Key material for multiple vaults required to move coins. legend. Okay, the second legendary thing that happened was Coinbase bought that thing, right? I mean, this will go down in history as one of the most important, most strategic acquisitions of all time in all industries, in my humble opinion. Okay, and the thing about the custodial business is it's all based on reputation, and it's all based on being Lindy, right? It's being uncompromised in the field for a long period of time. And it's not only time in the field, it's like time in the field times size of the honeypot, size of the target, right? The amount that you could steal. So there's no replicating that. That's like a path dependent thing, right? You start the thing off, it gets scale, and then it continues to accumulate more and more scale, and it wins new business. And yeah, it's a bit of a network effect or a snowball, which is not a great fact for those of us who believe in self-custodied coins. Now, the good news is also there's another snowball effect, or there's another path dependency in Bitcoin, which is a lot of those early coins not held by companies, not held by centralized exchanges, right? They're held by individuals or groups of individuals, or who knows. And that's the other sort of countervailing ballast in the system, which makes it unlikely that these centralized custodians are going to capture too much, in quotation marks, share. I don't know how much too much would be, but let's just say I'm not that worried about too many of the coins getting centralized in these locations. And then the last two bits I have to throw in there for myself is one of the key reasons I made the decision to help get Swan Advisor Services off the ground is because I wanted some portion of the market to not buy the Roach Motel paper Bitcoin that you can never withdraw. I wanted to get clients into Bitcoin that they can actually take custody of either immediately or someday when they're ready. And so there will always be that portion of the market that will compete for share. And I'm cautiously optimistic that actually more and more people who would otherwise buy the ETF or otherwise buy, GBTC or whatever paper product will, with time, learn about the benefits of self custody and hopefully adopt some of these hybrid systems that allow them access to their coins, whether in a collaborative custody arrangement or otherwise.
Yeah, my take is that there's just when you take self custody, you don't have counterparty risk, and it's like what Preston said. You have to trust that the ETF is going to be managed appropriately and that the custodian is going to keep it secure. And the fact is that hacks can happen. It hasn't happened with Coinbase's custody solution, but it can happen. And if you read the trust agreement, which I did, you know, you don't really have much rights. I mean, they lay out the risks of a hack, and those shares are going to zero. If there's a hack of those Bitcoin, they can amend the trust agreement and you can't do anything about it. They can change the fee structures. They can do all these things. And you really just don't have that much rights when you own a share of an ETF, unlike when you actually own the underlying Bitcoin. And I do think that the more people that hold it are going to understand what they own, and they're going to kind of dump their shares for the real thing eventually. And I think it's up to us to build tools that make it easier. Another thing is that when you have institutional like custody solutions right now, there's a couple different things. There's like multi-sig, which has flaws because it kind of depends on human processes on top of it. Ultimately, there could be collusion between the keys, and something could happen on that kind of layer above. And then there's also like multi-party computation, which is also always connected to the internet, and that has flaws as well as cybersecurity risks. So it's up to us to build these like and mini script. I'm kind of bullish on these like multi-party institutional multi-sig solutions with mini scripts. I think it could kind of help decrease the risk of custodying, and also it could kind of help these individuals be more secure if they do use these products, because BlackRock and the other people would have a fiduciary duty to choose a better custody solution that is more secure. And maybe we can come up with a solution that's also better for the individual, give them more rights. And I think that's the beauty of Bitcoin, because it's digital in nature, that we can actually do these really cool things and innovate on it. So I think it's up to the community to build solutions to maybe help reduce this risk of centralization from these products or something like that. So just my 2 cents. But it's a risk, but I believe that more and more people will understand why self custody is important. Kind of similar to what Preston said.
It's not a risk to Bitcoin, in my opinion. It's a
Right.
risk to
Correct.
the participants that choose to outsource their trust to somebody else. That's who's at risk.
Correct.
And you're coming off of decades of cognitive conditioning that you can just call a bank and reverse a transaction, or I can just call my broker and the ETF is going to show up there. And if they go and rehypothecate a bunch of shares way beyond what they should have, and they should have blown up, and the government steps in and like recapitalizes them, and then they're able to like go get those shares back. And like me, who this party that was acting in this really like vile way with my property on my behalf, I didn't even realize it. It just got taken care of and the shares are still there, right? That's a majority of your market participants don't even know this stuff's happening. They just know that they can call a hotline and like it's always still there, because behind the scenes they're getting bailed out, and they're debasing money to always bail out and make sure everyone's safe and secure and all these things. And we're leaving that world, but everybody still thinks we're in that world. And so if you think you're still in that world and you're choosing to buy the BlackRock product, just be aware it might not work out well for you. It just might not. Like, and nobody's going to come rescue you. They're just not.
Yeah.
It's another good reminder to anyone out there who hasn't actually sent a Bitcoin transaction on chain, on network. There are still many, many, many people in the world who think Bitcoin is a ticker on a screen. It's going to be part of my portfolio because number goes up and it's uncorrelated and it seems to be growing, and it's and the kids like it. and so just a reminder to anyone out there who hasn't actually tried the product, and I mean actually sent Bitcoin, give it a shot. It might blow your mind.
Still blows my mind. Now,
Amen.
if Bitcoin was proof of stake, I would be worried. I'd be much, much more worried. Just gotta throw on that out there. But let's kind of switch gears. Let's switch gears to macro a little bit, because um, it's for the last like quarter, it seems like people have been calling a recession. Recession's right around the corner. But we have the Nasdaq off to its hottest start ever to start first half of a year. We obviously have Bitcoin ripping, and yet inflation data is rolling over, and people are fearing a recession. You have other disinflationary signals. We have PMI contracting. We have shipping rates in the toilet now. We have, all of these. The commodity index is down pretty big. All these signs, the yield curve still inverted. You can just go on and on and on about the economy, but asset prices just keep ripping. And so what's your guys' takeaway right now with the broader macro picture? And where do you guys think things are going in quarter three? So to Preston.
I think I can't remember what I said the last time we met, but I think I was talking about the momentum on the equity market just had shifted and turned green, and that it was, despite all the headlines, if I'm just looking at the price action, it's telling me that we're now starting another bull market. I think I said that last quarter.
Yep.
And I did. So, yeah, so it's done well. That thesis has continued to play out. I have no indications that that's letting up in equities, and that equities are going to continue to outperform the dollar, is what I would compare it to. With respect to fixed income, I suspect, I can't remember what I said, but I suspect that I would have said that there's no indications that the sell-off is over and that the sell-off is going to continue, based off of the volatility and the trends that I was looking at. That has definitely been right over in Europe. In the US, I think it's continued to sell off since the last time we met. I think I remember talking about oil being the thing to really kind of watch, and wasn't quite sure whether that's breaking out or not breaking out, but hitting its low. I think that has gone. Let me pull up a chart real fast from the last time we talked. It has gone pretty sideways since the last time we've talked, which would potentially confirm that we're seeing that pivoting and that the bottom is being laid right now. A lot of people would disagree with that oil thesis because they're expecting a recession. They're expecting, like, when you look at bankruptcies, especially in the commercial sector, the issues that are happening in the commercial sector, I think a lot of people are expecting that to get really nasty into the third quarter and fourth quarter. And it may, I think on the real estate side, commercial real estate side, it may. But it seems that there's been a pivot in central banking policy, and that they are being more accommodative through all the different levers that they're able to pull to make sure that there's enough liquidity in the system. I don't, I, my concern goes back to my point that I made on the last quarterly update, which is, if oil, and this is a huge if, I don't know that it's going to do this, if it starts to rip and starts to bid, like, it is going to cause all sorts of issues because of the treasury market sell off that will then continue to go even further than it was the last time that we talked. And that's going to cause all sorts of balance sheet issues for banks and anybody at that point, because they have to, as they're rolling the debt, it's just getting harder and harder. And I just don't know if what we're seeing in equities, and I had a little bit conversation about this with Luke Roman recently, is the price action we're seeing in equities, the flow of funds coming out of fixed income, and it has nowhere else to go because it has to chase after something that has a finite supply. Is that what's causing the equity run that we've seen? Is because you have this consistent selling happening in fixed income, and is that going to be persistent, which will cause the equity market to continue to run? I don't know, but the price action is telling me that it's still a bull market, that it's, since the last quarter, we're still in a bull market in equities.
Well said. So first of all, people should listen to Preston's most recent conversation with Luke Groman if they haven't already. It was a great one. It always is.
Thank you, sir. Thank you.
It always is. And also, people should listen to Preston when he drops hints like, my momentum model is telling me something may have shifted in the market. Guess what? That was dead on right. It's not the first time I've heard him say something like that, and it's it's been an indicator of what's to come. Not financial advice. So yeah, it's I couldn't have put it any better. I really don't have much to add other than the economy seems stronger than most people thought it would be, despite the fact that rates are so much higher. Stimulus out of China may be helping to goose things at the moment because their reopening was weak and they've decided to stimulate more recently. So that could be a factor. I'm still cautious about a recession. It may not happen. It probably won't happen this year, but I still think more likely than not it happens by the end of next year. But we have to be we have to listen to the market, and we have to be positioned basically for any and all possibilities. And so, yeah, it's been more important to be diversified if you're a normie than ever. And if you're a hardcore Bitcoiner and can suffer the volatility, that's a different way to live. But yeah, these are as uncertain times as ever with respect to which way are asset prices likely to go, especially in the short term.
Andy, what are your thoughts on the flow of funds coming out of fixed income into equities, and that's what's driving the bullish price action that we've seen for the year?
Yeah, I think it's a really interesting idea. I think that definitely on average the statistics would suggest that a lot of people are offside in the sense of they sort of they what's the word? They got cautious, they got nervous, they sort of fled to or hid in short-term fixed income. Talking about,
Hmm.
T-bills basically and money market funds. So I think that there's perhaps never been as much money in money market funds and T-bills ever as there is now, which
Hmm.
means equities are under-owned, which means that, when you start to get a positive trend in equities, anyone who gets evaluated on short-term performance has their has their oh shit moment and realizes they're off sides. If you're a hedge fund manager and you get paid at year end and the year's half over and you've been too conservative and you haven't made money, you start to
Hmm.
get nervous. So I think that could be a real factor. And yeah, as to the hypothesis about specifically the huge fund flows coming out of fixed income having to go somewhere, I think that's true. I sort of suspect that more of the flow has been into short term. So if you're saying, okay, like the
Yeah.
long end of the curve went up, so like treasuries and mortgages and junk debt lost a bunch of assets. Assets flowed out of there. I suppose I'd assume that more of the flow went into money markets and short term treasuries, but it
Hmm.
wouldn't surprise me at all if a significant amount went into equities.
Yeah, I agree with that. I mean, that's why. Yeah.
Which is to your point, it's like, look, when the flows are that large, even if it's, some slice of the flow going into
Yeah.
another asset class, it still moves the needle.
You're gonna have to get somewhere. Like, let's just play a scenario. I'm not saying this is my base case, but let's just say that energy prices do rip into the close of the year, right? Now, all of a sudden, all of your yields on bonds are gonna have to sell off even more than where they're already at, right? Those yields are gonna blow out. Everybody that's having to recap their duration in fixed income is going to do it at higher rates, which means that their earnings power for equity is lower. But like, where can you move out of fixed income at that point? Then and assume you don't understand Bitcoin, because that's most of your people, or think that Bitcoin is just like, this fake magic internet money, which is most of your participants in the market. Where do they go? They have to go into equities. Michael Saylor does such a great job talking about why it's so hard to own commodities. So, like, even if the commodity prices are ripping, like, if you're buying any type of spot, like, you get into this duration issue where, like, some of the stuff that you're buying is only good for 30 days, or, like, commodities are really hard to do unless you're just in a really short time window from like an investing standpoint. But most investors, in my opinion, most investors that are like really making the big moves, they're long-term investors. They're trying to own something for multiple years. And so, like, where does that person go, especially if they're coming out of fixed income? Like, where is that person going to go other than the equity market to preserve their buying power?
And imagine the narrative and the story here, because we see it's been, yes, the base of stocks in the Nasdaq has been broadening in terms of the ones that are making gains, but still most of the gains came from a handful of AI linked companies, right? Not only do you have this strong narrative in AI, but Preston, what you said about refinancing risk is spot on. What companies don't have refinancing risk? These
Yeah.
giant fortress balance sheet tech companies, right? They have net cash, not net debt. So unlike higher levered balance sheets that have debt that have to refi at higher rates, these guys, these guys are bulletproof in that regard.
It's amazing in business school. Like, if you're looking at a company and it has no debt, like, the professor's, is going to push up his glasses and be like, well, they need to issue some debt because they're going to have a higher bottom line because they're going to get this advantage for their interest expense, right? Which makes sense, but it's like, why are you trying to accelerate time if you can't employ the borrowing, the proceedings that you're borrowing, right, into some asset that is a reason why you're trying to outpace your competition. And so I think it's been such a business practice when interest rates always go down for 4 decades straight. it becomes this thing that you just take on debt because you make more money if you take on debt because of the way that the accounting works, right? And so they've done this, and the companies have done this year in and year out for 40 years, only to find out that when you have to roll that debt at a higher interest rate, all of a sudden that little neat calculation that your interest expense like reduced your income, and you actually made more money by having debt on the balance sheet, all of a sudden that's just not as valid anymore, and you're making less money, and you're scaring the hell out of yourself because the ratio of interest expense to income is not even close to what it was before, when you had a 0.5% or 2% interest, and now it's 4% interest or 7% interest or whatever it might be for name it company. It's a drastic shift for corporate executives. It's a drastic shift for CFOs that they've never had to deal with in their entire lifetime, and they need to wake up and stop listening to the people teaching these MBA programs.
Yeah, I would not probably want to be a corporate treasurer at a highly levered company in
And
the
there's a ton of them.
2020s.
And that's the base case. Most of them are.
Support group.
Yeah, man. Yeah.
And these bondholders, I mean, they've gotten crushed over the last couple of years. I mean, 2022, it was the worst year for bond investors in centuries. And, when you look at the yields right now and how they're kind of spiking, especially on the long end, I mean, do you think these are the bond investors just kind of being like, okay, the Fed doesn't have control over this. This is going to get worse. Inflation is going to remain sticky. The Fed's going to have to keep raising. I know the market expects the Fed to raise another 25 bips at the next Fed meeting. Do you think this is kind of bond investors like throwing in the towel a little bit too? And if that's the case, and more bond investors are going to be selling their bonds and yields are going to keep going up, I mean, Janet Yellen has to be sweating, right, when she sees that happening.
It's that combined with when you have a higher interest expense because you're rolling your debt, like you've got to come up with cash from somewhere. So you have to sell, right? So if you're sitting
Yeah.
on a tranche of these, like you have to sell those if you're sitting on them as assets on your balance sheet, you got to sell them to come up with, to offset your lack of earnings power through operations, right? So you have that playing out. It's like it's a double whammy type situation.
It's a really good point. Not every corporate treasurer yet has adopted the sailor model of holding
Nope.
Bitcoin on the balance sheet. They're still holding treasuries. They're still holding treasuries. And then the other point I think probably Luke Groman would make would be, the international fund flows and the central banks obviously matter a lot, right? It's like who at the margin who's buying treasuries. It used to be that foreign central banks were, and now they're not so much. So yeah, at the margin, who's moving price or who's supporting the market. For sure, there are entities that used to support the treasury market that perhaps aren't supporting it quite so much anymore.
Yeah, it becomes who's going to buy that debt. I think a lot of us think that the Fed's going to eventually have to come in and do what it's been doing over the past couple of decades. Especially when you look at kind of the developments occurring more internationally. I mean, just today, I think there was an announcement that the BRICS are going to come out with this new gold-backed currency. I just wanted to get your guys' thoughts real quick on this like de-dollarization narrative that you see in the headlines more often than not. Do you guys think that there's any like real truth behind de-dollarization that's occurring right now? Do you think it's maybe a little premature to say that the dollar, the end is nigh? Or what's your thoughts around this recent BRICS news?
So real fast, I just want to read this tweet from because we were talking about Sailor and adopting a Bitcoin standard,
Yeah.
and this tweet from Eric Weiss says it all for me. MicroStrategy has given every company the blueprint of how to 10x, literally 10x their enterprise value in less than 3 years. And this is a $1 billion company, right? Like this isn't like some small cap that's like worth $5 million. This is a $1 billion company 10x their enterprise value in less than 3 years by adopting a Bitcoin standard. You couldn't sum it up any nicer than that. So anybody who manages a treasury or works for a company that's $1 billion enterprise, like, stick that one in your memory bank. To the BRICS question. So I think I think it's telling in that they're holding these meetings. It's telling that they can see cracks in this legacy treasury bedrock system. It doesn't necessarily mean that their solution is going to be viable anytime soon or at all. But the fact that they're having the conversations and beating that drum is, I think, the noteworthy point.
Mm.
Yeah, and I think that it's all in the same vein of we're living in this aberrant period where fiat currency reigns, and most of history had money, plus currency built on top of money, where there was actually something backing the money, something hard, some kind of commodity, right? Gold preferred, but it wasn't always gold. Gold, quote unquote, won, or at least for a while, but it's ebbed and flowed. And so in a world where there's too much debt, there's too much money printing, there's too much stimulus, uh, the weaker currencies are going to lose ground against the stronger ones. And they'll have to find a way to mitigate that. Oh, and by the way, they'll face competition from the hardest money asset we've ever seen. Um, and so, yeah, some will, get together and try to launch joint currencies. I think we saw that proposed in South America recently. Others will try and back their currencies with hard assets. One or two already have adopted the world's hardest money as legal tender. It's kind of I think, this mishmash, all of the above, this bubbling cauldron of competition between the hard money asset that was always there, gold, the new hard money that's here now, Bitcoin, and then, yeah, all the governments scrambling, trying to figure out how to make their currency competitive as they lose ground to the competition. As to the dollar, yeah, I'm less worried about hyperinflation in the dollar anytime soon. I'm more optimistic about this. I used to, there was a time period when I thought there would be a Bitcoin rapture and, everything would collapse into Bitcoin in one fell swoop. Not only do I not really want to live in that world if it's sudden, I also don't think it will be sudden. I think anything's possible, but I think it's relatively unlikely, not least because the the folks in government still have a lot of tricks they can pull out of their sleeves to try and prevent that, or let's say trying to delay that outcome. So yeah, it's de-dollarization probably will happen with time, but I'm not too worried about a major event anytime soon.
The thing I would say, Sam, is all it says to me is they're screaming to the world, we've done the math and the math doesn't work
Yeah.
with the current system. That's what they're screaming to the world, is that the math doesn't work.
Yeah. They're
And
looking at
yeah,
$32 trillion in debt, and they're like, this doesn't make sense.
yeah.
Yeah.
Oh, plus also the guys running the show are willing to weaponize the currency sometimes if they choose.
Absolutely. After the Russian reserves were seized, I feel like that's when things really went into overdrive. But Andy, I like what you said. I mean, competition is returning to money. And I think ultimately that's a good thing. And I think, we have the Michael Jordan of money or the fastest horse or whatever you want to call it, just based on the monetary properties of Bitcoin. And so bring the competition back to the money. I think that'll be good for everybody. Don't you guys think?
No doubt.
Absolutely, absolutely. I like it when goods in the free market compete for my business, and I'm very happy for some people to also place their assets in the same asset that I've chosen. I'm happy for others to wait a little while longer and make their decision later, and that's absolutely fine.
Well, we're near the end of the show, and I can't let you guys go without Q3 projection or two, or prediction. Uh, Anything goes. It can be anything. Doesn't have to be Bitcoin related. It doesn't have to be price related. But give me a prediction or two. What do you guys think might happen over the next say 3 months?
Dylan LeClaire recently tweeted out something with this move in fixed income that we just saw with the jobs numbers that came out last week, and the aggressive sell off that you saw just in like 2 days was going to wreak some havoc for some folks in the coming quarter, and I would agree with that. I think that most were probably expecting the sell off in fixed income to kind of be over, and I think we're posturing and positioning themselves for maybe recessionary forces and this removal of demand out of the system into the third quarter, which would then cause a bit of bidding in fixed income, and it's not moving that way, and it's definitely not moving that way in Europe. And I kind of agree with him there. I don't know necessarily what that means as far as how much of a shakeout you might see and where you might see it. I don't have any type of opinion on that. And again, back to the oil comment, that's the thing I'm watching very closely. It's gone sideways, the volatility's collapsing, and I'm curious if we're going to get a big drop or if all of a sudden the thing starts to bid because we're running out of supply and the demand is still there and we weren't expecting to have the demand there. And if that's the case, like it's going to get very interesting into the third and fourth quarter.
Those are great.
Bitcoin's going to continue to do great, in my opinion. It's going to be volatile all over the place, but I think we're going to have a really strong closeout into the end of the year.
Yeah, I like that. I like those thoughts. Maybe I'll throw a little bit of an oddball out there, which is it seems like the AI trade has legs. I mean, obviously, anything with exposure to AI has been ripping, huge momentum. It's quite possible that we end up with a true bubble in that sector. Why not? And I have to wonder out loud what form of money the AIs on the internet are going to be using, and then I have to ask myself on a valuation basis, do I want to own Nvidia at $1 trillion market cap? I don't even know what the sales multiple is. Forget about the earnings multiple. Where to 3x my money, market cap has to go up by $3 trillion. Whereas with Bitcoin, to 3x my money, we only have to sort of clear $1 trillion by a little bit. So in terms of net gain from here, so I wonder what the AI enthusiasts think about that.
Nvidia top line for the last 12 months, 25 billion.
Wow. Wow. A trillion divided by 25, 40x. I could do that math in my head. It's a nice round number.
Holy moly.
Yeah, people are underestimating the AI the AI demand for Bitcoin. I bet they have diamond hands, and I don't think they're going to use any other money. So Guy Swan and VJ and I talked about that as well, and Lightning Labs just came out with some piece of technology that allows AI. I haven't really looked into it, but Bitcoin and AI, Lightning and AI could build
I heard they're
tools
also
around that.
very good at self custody.
Yeah, they're not going to part from their sats easily, I don't think. They're going to have to do some work to earn that. Well, thanks, guys. Thanks. Another great quarterly update. It's been a pleasure talking to you guys as always. I know that people probably already know you guys and where to find you, but if we have a first-time listener here, where can they find more of you guys' work and more of your thoughts? Where would you like to point them to?
Andy.
Okay, I guess just Twitter, Edstrom Andrew, or check out Swan.
Right on.
.com.
I'm Preston Pysh, handle on Twitter. I'm active on Twitter, and I have a podcast. It goes by We Study Billionaires. If you look for that in any type of podcast app. The Bitcoin show comes out on Wednesdays that I host.
And it's a great show. So check that out, like it, subscribe. And thanks again for coming on, guys. I can't wait till the next quarterly update where we could check back in on your predictions. You guys are always pretty spot on. And so can't wait to talk again. Have a great day. If you care about your financial future, you need to check out a couple of our offerings, including Swan IRA and Swan Private. Swan Private is our white glove concierge service where you get a trusted partner on your Bitcoin journey. We offer all kinds of education and research projects, as well as exclusive events to our Swan Private customers. Check it out today at swan.com/private. Also, Swan IRA. Swan IRA is the best way to gain exposure to real Bitcoin in a tax-advantaged account, like a traditional IRA, a Roth IRA, or rolling over your 401k. So if that interests you, check it out at swan.com/IRA today.